Welcome to the daily insights that matter. The most awaited fourth quarter GDP numbers for India have surpassed expectations, recording a surprising growth rate of 6.1%. This impressive performance has not only boosted the overall growth rate for fiscal year 23 to 7.2%, but it also solidifies India's position among global peers. India's GDP rose by 6.1% in the March quarter of fiscal year 23, beating the analyst expectations as expansion in manufacturing and construction reflected sustained strength in domestic demand despite a gloomy global outlook. Economist poll Reuters had forecasted a growth rate of 5%. Looking at the breakup, after contracting for two consecutive quarters, the manufacturing sector rebounded and grew at 4.5% on improved margins and moderation in input costs. Apart from this, agriculture and services were on the rise, with the construction sector reaching double-digit growth. Due to the higher growth in quarter 4, this has led to an upward revision in the overall economic growth for fiscal year 23. The GDP has now been revised to 7.2% from the earlier estimated 7%. The economy had grown 9.1% in fiscal year 22, but was attributed to a lower base of a pandemic hit in fiscal year 21. This growth of 7.2% underscores the resilience of the Indian economy amidst the uncertainties and global challenges. Having said that, India still maintains its stance of the fastest growing major economy in the world. India's fiscal deficit for fiscal year 23 has shown a significant improvement, narrowing down to 6.4% of the GDP compared to the previous year. This achievement indicates that the government has successfully met its budgeted target, which is a positive sign for the country. Fiscal deficit is the difference between the total expenditure and the revenue of the government. In other words, fiscal deficit is a shortfall in the government's income compared to its spending. According to the data released by the Controller General of Accounts on Wednesday, overall expenditure was 41.88 lakh crore and the total receipts was 24.55 lakh crore, thereby creating a 17.33 lakh crore fiscal deficit, which amounts to 6.4% of the GDP. The fiscal deficit in absolute terms was 17.33 lakh crore, which is marginally lower than the amount of 17.55 lakh crore projected in the revised estimates in the budget. The fiscal deficit of the union government was 9.2% of GDP during the pandemic year of fiscal year 21, which further moderated to 6.7% of GDP in fiscal year 22 and was budgeted to decline further to 6.4% of GDP in the fiscal year 23. The fiscal deficit for FY23 is in line with the glide path envisioned by the finance minister in the union budget that she presented on February 1st. Furthermore, the aim is to further reduce the fiscal deficit to 5.9% of GDP in fiscal year 24. Talking about the current fiscal starting April 1st, expenditure in the first month of the ongoing financial year was 10.6% higher than a year ago, while net tax collections were 14% lower than last year. However, higher than budgeted dividend surplus transfer of 87,420 crore from RBI is likely to provide some cushioning to meet any undershooting in other revenue streams or overshooting in expenses related to the respective budget estimates. Having said this, this is me, Rahil Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.